Hi, my name is Dr. Steve Sugarud. I'm the Chief Strategist for Stansberry Research. We're one of the largest independent financial research firms on the planet, with more than 350,000 clients in over 170 countries. I've put together this letter to alert you to an important financial announcement coming soon, which could signal a huge shift in the international currency markets. For anyone who holds their savings or investments in US dollars, this day and the months that follow will be incredibly important because dramatic changes are coming. And please keep in mind, this has nothing to do with inflation, interest rates, unemployment figures, or anything like that. What I'm talking about instead is an official announcement coming from one of the most powerful organizations on earth. It's the first time in 35 years that something like this has happened, and I believe it will trigger one of the most profound transfers of wealth in our lifetime. You simply must be prepared and understand what's about to happen. Why am I so concerned? Well, I've been active in the markets for over 2 decades. I received my PhD in finance. I've been a stockbroker and a mutual fund vice president, and I even ran my own hedge fund. But I've never seen anything in the markets that could move so much money so quickly. I'm talking about hundreds of billions of dollars changing hands in a single day after this announcement is made. Now, I don't believe there's going to be a literal change to legal tender or paper currency in the U.S., but if you own U.S. assets, stocks, bonds, or real estate, or just cash in a bank account, you must be aware of what's about to happen. And as you'll see, this could be a once-in-a-lifetime chance to set yourself up for safe and extraordinary gains. Until recently, this story has received very little press. In the early stages of my research, I saw one small article in the back pages of Bloomberg. I saw another short piece deep inside the Wall Street Journal. But that's already changing, and I suspect this story will explode in the months to come. Let me explain. Around October of next year, the International Monetary Fund is going to make a huge announcement that could radically alter the financial markets and initiate a transfer of wealth unlike anything we've seen in more than 3 decades. We know the approximate date of this announcement because I recently dug through all of the IMF's press releases. Like most official documents, they're filled with acronyms and insider jargon. But if you understand the markets, it's not too hard to figure out exactly what's going on, what they'll really be deciding. I can tell you for certain that this meeting is all about a big potential shift in the world currency markets. As you probably know, the currency market is the world's largest, most vital marketplace. It's far, far larger than the stock market. After all, it's the market for money. Maybe you don't care about currency movements just yet, or maybe you think currency shifts, such as the one that's about to take place, affect only traders and big banks or people living overseas. Believe me, nothing could be further from the truth. Here's a quick example of what I mean. Although most Americans didn't realize it, there was a similar, albeit much smaller announcement in the currency markets last year, and it sent shockwaves around the globe. Here's what happened. January 15th, 2015 began like any other day in Switzerland. But around 9:30 a.m., without any warning whatsoever, the Swiss central bank announced they were ending the nation's currency peg. Previously, the value of the franc grew and shrank alongside the value of the euro. The currency was considered safe and had extremely low interest rates. This enabled traders from around the world to borrow in Swiss francs. Homeowners throughout Europe did the same, and for years, everything seemed to work just fine. The average Swiss citizen didn't think twice about the franc, much like most people in the U.S. think very little about the value of the U.S. dollar, since everything we own is priced in dollars, and everything we buy is priced in dollars too. But things in Switzerland began to change very quickly after the January 15th announcement. The franc soared as high as 40% in a matter of hours. Because the Swiss franc got so expensive, investors quickly dumped Swiss stocks like Nestlé, Cartier, and Credit Suisse. Billions were wiped off the Swiss stock market overnight as part of the largest one-day drop in almost 30 years. Nick Hayek, the chief executive of Swiss watch firm Swatch, said depegging the franc is a tsunami for the export industry, for tourism, and for the entire country. Steen Blafalk, CFO of Saxo Bank, told the Wall Street Journal, "I've been in the market for 30 years and I've never seen anything like it." Even worse, millions of middle-class Europeans outside of Switzerland lost a fortune because they borrowed money in Swiss francs. Suddenly, they owed 40% more than they did the day before. For example, one Warsaw borrower saw the mortgage payment on his family's small flat shoot up more than $240 in a single week. The 40-year-old lawyer told Reuters, "When I heard the news about the franc, my first reaction was disbelief. Then came slight horror. What would happen next?" And a teacher living near the Swiss-Italian border said, "I'm losing tons because of the franc. Our family's mantra is now buy only what's essential." But not everyone suffered because of the Swiss Central Bank's currency decision. Some banks and many investors were properly positioned for the big move. Questra Capital, for example, made millions betting that the euro would slump before the franc. "We immediately knew that it was going to be a very, very good day for our investors," said executive Thomas Suter. The Wall Street Journal reported that people living near Switzerland's border took advantage of this arbitrage opportunity almost immediately. People throughout Switzerland flooded local currency exchange centers to get more euros with their francs than ever before. Take a look at the lines that formed at currency kiosks. Some Swiss ATMs were literally running out of euros to dispense. You get the point. This was a big move in the currency markets. It affected millions of people. But here's what you need to keep in mind. The Swiss franc is like a speck of dirt compared to the worldwide importance and use of the US dollar. Consider this. Government and public debt in the US is about 100 times more than that of Switzerland. And there are over $1 trillion of physical US currency in the world, compared to only about 389 million Swiss francs. In other words, there are 3,000 times more US dollars in circulation than Swiss francs. So while the recent big shift in the Swiss franc was important, it's going to be nothing compared to the ramifications from what's about to happen to the US dollar. You see, I believe the IMF's pending announcement will directly affect the global use of US dollars. So while swift movements in the franc affected some hedge funds, international bankers, and a few million people living in Europe, swift movements in the dollar will affect nearly everyone in the world, but Americans most of all. That's because there are simply so many more US dollars in circulation, so much more dollar-denominated debt, and so many more things priced in US dollars compared to the Swiss franc or any other currency. Here's what's about to happen. The important point to remember is this. Very rarely do we know the exact timeline for a major event in the financial markets. But as I'll show you, I can show with as much certainty as there is in the investment world that this event will happen. And when it does, it's going to start a domino effect that will last for years, and it will affect you and your money for a very long time. If you're unfamiliar with the IMF, think of them as a club of bankers from all over the world who regulate the entire international monetary system. The Brookings Institute has actually called this powerful group part of the world's unelected government, and they hold the special power to control what's known as the world's reserve currencies. If there's just one thing you learned from me today, it's this. Reserve currencies are probably the most important financial instrument in the world. Most people mistakenly believe there's just one reserve currency, but today there are actually 7 major reserve currencies. Governments use reserve currencies to pay their debts and to diversify their savings and investments. Businesses use them to trade, and any change to the world's reserve currencies quickly reverberates around the world, putting literally hundreds of billions of dollars into motion in a matter of minutes. Before I go any further, let me stop for just a second and tell you the IMF is not going to announce that the US dollar is no longer the world's #1 reserve currency. Lots of people have been talking about that idea in recent years, but that's not what I suspect the IMF is about to announce. But I'm convinced that they are going to make a huge and dramatic change to the reserve currency system, which I believe will affect you over the next few years. Let me explain this change first by showing you exactly what a reserve currency is and does, and why they are so important. By definition, a reserve currency is money held in significant quantities as a means of international payments and settlements. And as most Americans know, for about the last 48 years, the United States dollar has been the world's dominant reserve currency. That means the US dollar is the most widely accepted, widely used currency in the world. For example, when South Korea wants to buy beef from Argentina, or when Germany wants to buy oil from Saudi Arabia, the countries must first switch their home currency into US dollars before settling their payments. Most people don't realize this is one of our biggest advantages as a nation. It's an exceptional privilege and one of our strongest weapons. As it stands today, America is the only country in the world that does not have to pay for its imports in a foreign currency. We can simply print more and more money whenever we need to. Think of it this way. Even when the U.S. is not involved in a trade, our dollars usually are, and that in turn helps support our economy back home. Because the U.S. dollar is the dominant reserve currency, countries and businesses around the world must purchase our dollars to execute their trades. If a country needs oil, wheat, or gold, all of which are typically priced in dollars, they must first make sure they own enough U.S. currency to make the purchase. But this is all changing, and more rapidly than most Americans realize. That's because one powerful new currency is about to be granted reserve currency status. It seems virtually guaranteed. And when this happens, billions, probably even hundreds of billions of dollars will flood out of the US dollar and into this new reserve currency. Here's how I see it all playing out. Twice a decade, the executive board of the IMF meets to reassess the world's major reserve currencies. We haven't seen a huge change to the reserve currency system in over 35 years, and very soon I believe the IMF will announce a new reserve currency. That announcement will set off a chain reaction throughout the financial markets. Literally hundreds of billions of dollars will begin shuffling around the globe, causing some assets to soar and others to come crashing down. This announcement will start a domino effect that will basically determine who in America gets rich in the years to come and who struggles. If you understand and know how to position yourself for what is about to happen, almost no other decision you make with your money will matter. I liken it to sitting on the California coast with a detailed satellite weather map in hand, predicting a tsunami almost no one else can yet see. Today, everything looks calm. The winds are light, the swells rolling into shore are significant, and there's nothing out of the ordinary. But today, you and I know there's a giant tidal wave approaching. It's going to wallop most people unexpectedly and will change things for several decades. Most people don't see it coming, but you and I, we can. That's how I feel, at least. Like I said, in my 20-plus years in the market, this is easily one of the biggest and most important shifts I've ever experienced. The beautiful thing is, we can see exactly what's coming and exactly how to prepare. Look here. This is a chart that shows all of the currencies that qualify for reserve status and the percentages in the world in which they're held by governments around the world. As you can see, the US dollar is by far the dominant reserve currency. When most central banks hold money in a currency other than their own, they hold the biggest portion of that foreign money in US dollars, a staggering 62%. On average, they hold a little bit more, 23% in euros, and a little bit, about 4 each, in the Japanese yen and British pounds. And while the Swiss franc is, in fact, a reserve currency, countries hold a paltry 17 billion in francs, not even enough to make up 1% of the pie. But remember what just happened when the Swiss policy changed? It rattled the markets, and what's coming soon will be much, much bigger. I estimate that the decision will alter about 10 to 15% of the world's reserve currency makeup. Again, we're talking billions and billions of dollars that start moving, and a process that accelerates every year. In the years to come, I believe this move could affect as much as 50% of the world's reserve currency pie. So the chart you just saw could eventually look like this. One thing you need to understand is that changes to the way countries hold their reserve currencies will have an immediate and massive impact on the currency markets, and they will cause extraordinary shifts of wealth. I think you could make gains of up to 500% in the right investments in the coming years very safely. There's no doubt in my mind, if you get ahead of these currency moves today, you will look like a genius in the years to come. You will be a hero to your family members. People will ask you in just a few years, how did you see all of this coming? How did you know this was all happening? While others are trying to squeeze more money out of ordinary stocks, bonds, and real estate, you'll be positioned to safely make extraordinary gains for many years to come. And the simple reason why is because you took the time to prepare. To show you exactly the type of gains I expect you'll be able to make, we have to look back at the last time such a major currency move took place involving the US dollar. In the 1970s, rising international competition, spiking energy prices, and unemployment crept into the U.S. economy. And with very little warning, on the morning of August 15, 1971, President Richard Nixon went live on television to make an important announcement. He announced that the United States dollar would no longer be backed by gold. Furthermore, governments around the world would no longer be allowed to exchange their U.S. dollars for U.S. gold. Nixon imposed a 90-day freeze on wages in order to combat immediate inflation. The announcement ushered in an era known as Nixon shock. You may remember it well. The price of goods and gasoline skyrocketed. Unemployment and inflation levels ultimately reached nearly 10% in just a few years, and people began getting out of the dollar in a significant way. Various assets here in America and abroad began moving in dramatic ways. Take a look at this chart to see some of the incredible gains that we saw during this period. Today, the same thing is about to happen again. We are going to see a similar huge move in the US dollar, and as a result, some assets are going to get crushed, while others will absolutely soar. I believe that in the months and years to come, we'll see the US dollar fall just as it did in the 1970s, and the coming announcement is going to accelerate that process. Now let me explain why I'm so certain this event will play out the way I believe. As I mentioned earlier, I recently tracked down copies of all of the IMF's press releases, and it turns out that in a recent interview, an IMF director laid out exactly how the process would go down. If you read what he said, you'll see clear as day the exact timeline for how all of this will play out. The IMF already began their twice-a-decade discussion about a special basket of reserve currencies, what they call SDRs, back in May of 2015. Originally, the big announcement was scheduled for later this year, but it's recently been pushed back. This is actually great news for investors because it gives us more time to take advantage of the situation. The new plan is for the IMF to make their decision about any change to the basket in late 2016. Here's how I predict it will play out. By next October, I believe the IMF will announce that a new currency has been added to this basket of approved reserve currencies. I can't know the exact day, of course, but typically these announcements happen on a Tuesday. But the exact day doesn't matter. What will this announcement be? Well, of the 6 largest economies in the world, there's just one whose currency has not yet been declared an official reserve currency. As you might suspect, I'm talking about China and their renminbi currency, or what many people call the yuan. And when the IMF holds its final meeting, I believe they'll approve the yuan as an additional reserve currency and grant it unprecedented power on the world stage. As a result, literally hundreds of billions of dollars will begin shifting around the world. This is the tidal wave. It's inevitable, it's coming, and you need to position yourself for it now. Governments and big banks will begin moving their holdings out of worrisome US dollars and into the new reserve currency, the Chinese yuan. The time to take advantage of this idea is right now, today, because this story still hasn't gone mainstream. Most people don't know anything about this, let alone understand it. This currency announcement is going to have a huge impact on you and me, because the majority of our savings and our investments are priced in US dollars. Millions of people holding U.S. assets could become poorer virtually overnight. The demand for dollars will inevitably fall as countries move money out of dollars and into China's currency as soon as it receives reserve currency status. At the same time, people who are informed and prepared have the potential to make an absolute fortune as this situation develops. I hope you take the time to take advantage of this situation. The truth is, you're unlikely to see a currency event of this magnitude again in your lifetime, but just once is enough to make extraordinary gains. Remember the chart I showed you earlier about the gains that were available in the 1970s? I firmly believe we'll see moves of 1,000% in the next decade, with a handful of assets versus the US dollar. But how, you might be wondering, can we be certain it will all transpire just as I've described? Well, there's no absolute certainty in the investment world, but this is about as good as it gets. The odds are so overwhelmingly stacked in our favor that you simply must take advantage of a situation like this when it arises. All you have to do is look at the evidence that's been piling up in recent years. I boiled it down to 4 key facts. Let me be clear about something. I'm not predicting the end of the US dollar or anything like that. What I'm talking about is a possible once-in-a-generation move in the world of international banking and finance. If it all plays out the way I think it will, it's going to have a major impact on you and your money. And if you understand what's taking place and get ahead of this move, you can not only protect your money, but safely make an absolute fortune in the next few years. This is going to be a much, much easier way to grow your money over the next few years than trying to pick the right U.S. stocks, bonds, and real estate. Here are 4 important facts that prove to me beyond any reasonable doubt that this move will take place. Fact number 1, China has the largest economy in the world. You probably saw this fact in the news last year. As of late 2014, China surpassed the United States as the world's largest economy based on purchasing power. This data comes from the International Monetary Fund, the very same group that will be making the decision about the Chinese yuan. It's absolutely inevitable that the country with the biggest economy is going to have a currency that's part of the world's reserve currency system. China also happens to be the leading global exporter as well as one of the world's largest creditors, second only to Japan. That means that most countries around the world look to China for financial help, including America. We borrow billions from China every single day. In total, today we as a country owe China $1.3 trillion. More than 20% of our foreign debt is held by China. If they wanted, China has the ability to single-handedly crush the US dollar. They could easily dump their $1 trillion in US debt obligations on the market. I'm not saying they'll do that, of course, but they now hold a tremendous amount of leverage in the financial world. They are going to get what they want, or they are going to make life very difficult for the United States and anyone else who owes them large amounts of money. China desperately wants the yuan to be a reserve currency, and they'll likely get their way. Fact number 2. They already came close in 2010. That brings me to reason number 2. This won't even be the first time the IMF considers the yuan for reserve currency status. China already came close once before at the last review in 2010. The only reason the IMF decided against approving the yuan was because they felt China wasn't a large enough exporter yet, and not enough people were trading in yuan. But a lot has changed since 2010. According to Eswad Prasad, the former head of financial studies and China divisions at the IMF, the Asian nation is likely to pass both tests. In 2013, China became the number 1 exporter in the world. The proportion of China's exports and imports settled in yuan has recently increased nearly 6-fold in just 3 years. And the International Business Times also reported that the yuan is among the top 2 most used global payment currencies. In other words, both roadblocks that stopped this process in 2010 have been cleared in time for the coming 2016 decision. Fact number 3. The yuan is already unofficially a reserve currency in many places. Perhaps the most interesting development regarding China's currency is that most of the world is already treating the yuan as a reserve currency. Consider the following. Today, more than 10,000 financial institutions are doing business in Chinese yuan, up over 1,000% from June of 2011. In December of 2013, the yuan overtook the euro to become the second most used currency in global trade finance after the US dollar, according to an international agency called SWIFT, which monitors international currency flows. There are now a dozen offshore yuan clearing centers, including Hong Kong, Australia, Taiwan, Singapore, London, Germany, Korea, and Canada. At least 40 central government banks have already invested in the yuan, and several others are preparing to do so, according to the British bank Standard Chartered. Some of the biggest commercial banks in the world, HSBC, Deutsche Bank, Bank of America, Citigroup, and Standard Chartered, all trade and settle in yuan. Even the British government, our strongest ally, has taken bold steps to prepare. The British Chancellor of the Exchequer, George Osborne, announced at the end of 2014 that the British government will be the first nation to issue bonds denominated in Chinese yuan. Osborne described the event as a historic moment and a statement of British confidence in the potential of the yuan to become the main global reserves currency. And that brings me to fact number 4. Fact number 4, the most connected bankers in the world are now preparing for this huge development. For example, a senior official at an Asian central bank told Reuters, "I think this could well be the year the yuan is included in the basket." Gary Smith, the global head of official institutions at BNP Paribas Investment Partners, said in 2013, "A lot of central banks hold some yuan now. Every single one will hold more than they do today." The official monetary and financial institution Forum, with thousands of followers on Twitter, including world-renowned financiers like Jim Rickards, posted the following on social media. And Benjamin Cohen, an economics professor at UC Santa Barbara, says it's very difficult to imagine the IMF won't approve the yuan. But perhaps most interesting of all was a story buried in the World section of the Wall Street Journal. Apparently, the deputy managing director of the IMF, Zhu Min, actually let it slip that he's confident the Chinese yuan will be a global reserve currency. The financial community understands that the yuan gaining reserve currency status is the logical next step for China's currency. So what can you do? Well, I've done a ton of research on this development. I got my PhD in finance with a specialization in world currencies, and for the past 20 years, I've written about extraordinary currency situations, like the collapse of the Russian ruble in 1998, and again just recently, the monumental rise in gold prices in the early 2000s, the havoc wreaked by the 2013 Argentinian currency crisis, the collapse of the Japanese yen over the past 3 years, and the Swiss franc depegging from the euro just a few months ago. The IMF's decision will have a tremendous impact on your life in the coming years. If you ignore this trend, you are ignoring what is probably the easiest, safest, and most reliable way to make money and also protect your family from the inevitable financial crisis in the US dollar. So what should you do about this situation? I believe there are 4 steps you should take right away to prepare for the big Chinese yuan announcement. These 4 steps will help you protect your current savings, investments, and retirement accounts from the fall in the US dollar that is inevitably coming, and help set you up to make extraordinary gains in the next few years. Let me show you these 4 steps now. Step number 1, get the playbook for how the IMF's decision will likely play out. Remember the chart I showed you about what happened in the 1970s, the last time the dollar fell? A few very specific assets skyrocketed hundreds of percent. And 40 years later, I think it's likely we'll see a few of these assets soar once again. What happened in the 1970s serves as a blueprint and a playbook for how I expect the IMF's October decision to unfold. It's imperative to know which assets in particular are in the right place to climb again. It's probably not going to be the exact same investments as the last time, for reasons I can explain, but some of the very same investments are likely to soar again, and a few new ones too. I honestly believe you could see anywhere from 500 to 1,000% on some of these investments in the years to come if you take a position soon. And to give you all of the specific details about this opportunity, I recently published a guide called How to Cash In on the Most Important Financial Decision of 2016. It lays out everything you need to know about exactly how to play this upcoming IMF decision, along with a few additional opportunities I'll explain in full detail. In this guide, I'll tell you specifically what soared the last time something like this happened. Additionally, I'll tell you what to say to your broker now, what price to pay for the assets I'm recommending, and what you should expect in the way of gains. There's nothing else like this guide anywhere at any price. Today, I've arranged a way to send you complimentary access to this new guide. But before I explain the details, let me go over the other 3 steps you should take to prepare for this announcement. Step number 2, the best way to make 500% in America as the dollar falls, tax-free. Step number 2 is an incredible and safe way a lot of rich, savvy investors are preparing for this epic event. You see, right now there's an unbelievable opportunity to make 5 to 10 times your money, all thanks to our government's out-of-control spending. I'd bet that as the dollar weakens, this opportunity could become even more lucrative. This investment opportunity has nothing to do with stocks, bonds, or options, but it's in a market that's almost as big as the U.S. stock market. Best of all, This hard asset has been proven to rise hundreds of percent when the value of the dollar is in jeopardy. In the 70s, for example, this was one of the easiest 100% gains you could make. It's really easy to buy, quite safe, and can provide extraordinary gains. Best of all, if you buy, hold, and sell this investment the right way, you can make great gains that are totally tax-free. I think it will be the best way to make money against a falling dollar. I've personally invested a big chunk of my own money in this kind of opportunity, and I've persuaded a lot of my friends and business associates to do the same. And the great part is, even if I'm completely wrong about my predictions for the currency market, and even if by some miracle Washington abandons its destructive financial policies, this investment could still make you very good money. That's partly because, unlike stocks, this can never go to zero. It always has value. I truly believe this asset is set to soar very soon, and you would be foolish not to take advantage of this opportunity today. Because I'm so excited about this opportunity in particular, I've put together a second full report on just this topic. It's called The Best Way to Make 500% in America, Tax-Free, and I'll give you access to it along with your copy of the research report I already described, How to Cash In on the Most Important Financial Decision of 2016. Now let's take a look at one more step I recommend you take right away to prepare for this upcoming announcement. Step 3. Take advantage of the secret currency trade of the decade. Most people have no idea this opportunity even exists, but it's actually one of the best performing assets of all time, and I believe it will provide incredible gains in the years to come. I'm talking about a very lucrative and clever way to play the currency markets without ever having to actually trade foreign exchange. This investment offers all of the protection of gold. In fact, it's backed by gold, but it's actually even better than gold for reasons you'll soon understand. In fact, the last time the Salomon Brothers brokerage firm included this secret currency in its annual investment survey, this investment ranked number 1 over the prior 20-year span with an annual return of 17.3%. In other words, it was the single most profitable thing you could do with your money over the previous 20 years. It beat stocks, bonds, gold, silver, artwork, diamonds, U.S. Treasury bills, real estate, and oil. And as the dollar fell in the 1970s, this asset earned over 1,000%. And again, from 1986 to 1990, investors who took advantage of this investment saw profits of 665%. Stocks, meanwhile, went on a roller coaster ride, including the 20% plus one-day crash in 1987. On top of huge potential gains, this might also be the absolute safest place to put a good portion of your savings right now. I think the gains could be much, much bigger this time around. Back in the 70s, many people were wary of owning various forms of gold because it had been banned for so long. Today, the market is much bigger, and the gains could easily turn out to be 500% or more. I don't want to reveal the secret right here, but I will tell you all about it in a third research report I'd like to give you access to today. How to make 500% gains in the coming years with very little risk. And that leads me to our final and probably most important step. Step number 4. Take advantage of the quickest, safest gains that result from this huge paradigm shift in China. One thing you need to realize is that what's happening with the yuan's reserve currency status will likely become one of the biggest news stories and investment opportunities of the decade. Putting just a little bit of money into this trend could make a huge difference in your savings and retirement accounts. Why? Because most people don't know that when the Chinese stock market moves, it can skyrocket hundreds of percent. For example, from 2005 to 2007, the Shanghai Stock Exchange Composite Index soared more than 600%. That's triple what we just experienced over the past few years in the U.S. market. I know, most Americans don't want to put money in China. And if you want to take steps 1 through 3 and avoid step 4 altogether, that's fine. You'll still safely make a lot of money in the coming years just by sticking with steps 1 through 3. But I strongly recommend you at least consider a very small investment in China to take advantage of this move. And to eliminate any confusion or hesitancy you might have, I've found 2 really safe ways for you to play this trade. Let me explain. First, take a look at this chart. As you can see, U.S. stocks have soared more than 200% since 2009, but Chinese stocks have yet to take off. I believe it's likely to happen again. Now take a look here. As you can see, U.S. stocks and Chinese stocks had about the same value from 2011 to 2012. but now there's a massive value gap. And more importantly, Chinese stocks are cheaper today than they were before their past two triple-digit booms in the last decade. Like I said, I know most people are afraid to invest money in China. So if that sounds like you, take your normal investing position and cut it to 90%. Take that remaining 10% and just dip your toe into these investments. The gains are likely to be extraordinary, and even just a tiny position can make a big difference in your overall net worth. By acting right now, you are getting into a market with a history of rallying triple digits at some of the lowest prices in years. And when the yuan receives its reserve currency status as I expect it to, investors and money will flood into China. The good news is I found a few super low risk investments that allow you to take advantage of the opportunity brewing right now. These investments trade right here in the United States. They are cheap and easy to buy and sell. Now keep in mind that Chinese investments can be volatile, so it may not always be the right time to buy these stocks, but I will always let you know when to get in. In 2015, for example, my readers were sitting on potential gains of over 110% in about 10 months by getting in a Chinese ETF at the right time. I believe that these investments are some of the best places you can find triple-digit gains in China. One takes advantage of a new investing rule I bet most people haven't even heard of. Essentially, it allows Americans to own A-class shares of stock typically reserved for Chinese locals. These are the types of shares I believe could earn 50%, 100%, or even 150% very quickly. I think this is one of the very best ways to play the trend, and like I said, when the time is right, you can make this investment right here in America with your ordinary broker. The second opportunity plugs you into some of the biggest and safest Chinese companies on the market. For example, one of them is a mobile phone provider with over 800 million subscribers. That's more than twice the number of people living in America. And history has shown us that when this investment goes up, it goes way up. During China's 2005 bull market, for example, it gained over 300%. If more and more companies begin using the yuan by the end of the year, these are the Chinese companies you'll hear about all over the news. Like I said, I know investing in Chinese assets is not for everyone, but this is potentially an incredibly lucrative trade. It's easy and safe to make and actually carries very little risk. I hope you'll at least take a very small position when the time is right. Everything you need to know about these Chinese investments is also included in your complimentary guide, How to Cash In on the Most Important Financial Decision of 2016. You don't need to worry about learning how to get into investments in China for yourself. I've already done all of the work for you. I'll tell you the stock tickers, prices, and exactly what to buy. Like I said, I expect these to be some of the quickest and safest gains you can make. So those are the 4 steps I recommend you take as soon as possible. The situation is going to move quickly as the story gains momentum in the coming weeks. Every week, I'm seeing a little more press coverage. Recently, for example, I saw a story in Barron's entitled China Aims to Join IMF's Reserve Currency Club, and another in Reuters which quotes IMF Managing Director Christine Lagarde saying the yuan's reserve currency is not a question of if, it's a question of when. Get in on this opportunity now. You truly have a chance to be in on the ground floor. Let me show you how you can get access to all of this research right now. It's easy, simple, and cheap. As I mentioned earlier, I work for an independent financial research firm called Stansberry Research. We have a staff of about 150 people stationed all around the world, from our headquarters in Baltimore to our analysts in Barcelona, Ukraine, New York, Seattle, and Colorado. We're also in the process of opening a new office in Singapore. Our main objective is to find safe and profitable investment ideas, like the ones I just told you about, which you are not likely to hear about anywhere else. The IMF's reserve currency decision is one of the top stories my team has been tracking this year. In the months to come, I believe we'll see a handful of other opportunities pop up as more and more people become aware of what's about to happen. These may be ways to protect yourself from a falling dollar or ways to potentially profit from a rising yuan. So to help you get started, my company has a completely risk-free program in place. When you take a risk-free trial subscription to my monthly research service, True Wealth, I will immediately give you access to all of the research reports I described here. This includes Research Report Number 1, How to cash in on the most important financial decision of 2016. Research report number 2. The best way to make 500% in America tax-free. And research report number 3. The secret currency. How to make 500% gains in the coming years with very little risk. In addition to these 3 research reports, you'll begin receiving True Wealth on the 3rd Friday of each month. You see, my aim in True Wealth is to find unique, simple, and extremely safe ways to help you invest and pay for retirement. My motto is simple. You don't have to take big risks to make big gains. I don't write a typical stock tout sheet, not by a long shot. I'm not going to tell you about the next high-flying penny stock, the next biotech trend, or a focus on one particular area of the market. No, I do a completely different type of research from anyone else I know of in this business. To help me, I've hired a team of mathematicians and spent over $1 million building an advanced computer system that allows me to identify indicators for some of the most important market moves well in advance. I also travel in person hundreds of thousands of miles in the past few years, investigating my favorite opportunities firsthand. In just the past few years, I've traveled to China, Hong Kong, Thailand, Singapore, Switzerland, Fiji, France, and Belize, among others, pursuing safe ways to help my readers make great profits. I'm proud to say that over the years, I've managed to call the timing of a lot of big market events. Like at the top of the market in January of 2000, I wrote to my readers, "We are at the peak of most likely the greatest financial mania that will ever be seen in our lifetimes, and quite possibly the greatest ever witnessed." And then at the bottom in March of 2009, I said, "I am extremely bullish on stocks starting now. This is why I am asked to appear on some of the biggest financial news shows month after month. In just the past 6 months, I've appeared on Fox Business, CNBC, and Bloomberg Television. And this is why many investment professionals have used my ideas for themselves and their clients. I'm talking about people like Alex L., a NYSE stockbroker with 2 decades of experience, who put it this way.
I learned more from Dr. Sugarroot in the last 8 months about the wide universe of investments than I learned in 19 years as a broker. Steve's recommendations are conservative, they make sense, and they regularly make large profits, much more than one would expect from safe investments."
And Gary M., a senior VP at one of the world's biggest investment firms, who called my recommendations the major arrow in his quiver. He said he used them for his clients' accounts all the time. Like a lot of wealthy investors, Gary reads a lot, constantly looking for investment ideas. My research, he says, ranks at the very top. Nothing makes me happier than to read those sorts of emails. So how much does my work cost, and how can you get started? Well, a 1-year subscription, including everything I mentioned here, normally costs $99 per year. And that's what many others have paid. But right now, you can try my research for less than half the normal rate. You'll pay just $39 for an entire year. That's a 66% discount. Why so cheap? Well, to be honest, our business really only works if our subscribers stick with us for the long term. But we realize you've got to try our work first to see if it's right for you. And that's why, through this presentation, we're making it so cheap and essentially risk-free to try. What I mean is, you'll have the next 4 months to take a look at the research reports I've just described, plus the next 4 issues of my True Wealth newsletter, and the next 4 months of my Daily Wealth email reports. If you decide for any reason within the first 4 months that my work is not right for you, just let us know and you can receive a full refund and keep everything you've received so far. In other words, by taking me up on this offer, you are agreeing only to try my work to see if you like it. I hope you take advantage of this opportunity. I think it's going to be by far the most important investment trend of the next 5 years and beyond. And you can be among the first to get in on it right now. You can set yourself up for extraordinary gains by simply making a few simple and safe moves today. One more thing you might want to know. As I mentioned earlier, we have hundreds of thousands of customers all across the globe. We have grown to be the biggest research organization of our kind in the world, and we have an A+ rating with the leading online reputation management website. You can't reach an A+ status without lots and lots of happy customers. Plus, we have also earned something else no rating agency can ever bestow. To date, we have had more than 35,000 subscribers from around the globe tell us they like our work so much they want to receive it for life. In my mind, these lifetime subscriptions are the absolute strongest endorsement we can ever receive because it comes directly from the people who know us best, our customers. Of course, I'm not asking you to make any big commitment. All I want you to do is take a few minutes to sign up for a no-risk trial subscription. Then take a look at all the research reports I've described. All of this information is yours to keep, whether you choose to continue reading my work or not. You're not risking even a penny to check everything out. Get started now by clicking the Subscribe Now link below. This will take you to a secure order form where you'll have the chance to review everything before submitting your order.